Our Managing Director and Head ECM at Deutsche Equities is joining us to discuss the trends in this all-important institutional market. Sanjay, good morning and thank you very much for dropping by in our studio. Well, for starters, what is the FII position? We see them only in driblets in the secondary market, but they seem to be active in your market, in the institutional large issuances.
Yes, that is there, because you're seeing the key thing which we are seeing is flows in the market are very strong on all counts. So FII, domestics, or even the HNI people who have been very active. Now, in that kind of situation, when a lot of money is chasing the market, I think it is good that some of it flows to the primary supply. And the investors also like it because they can buy chunks without disturbing the market price.
Okay. That will continue as a trend, you think?
Yeah, so that's very clearly a preference till we see flows as strong as they are.
Okay. What kind of sectors do they seem to prefer? Will it be, last year we saw all these diagnostic companies getting a lot of interest. Where is the IPO market looking at now?
See, if you look at what investors prefer is a separate thing, but what are the supply which is coming in? I think it's predominantly financial space. Okay. So you see a lot of banks have raised capital, which is in anticipation that, yes, they'll need capital for the capex cycles to grow. Right now, it's primarily focused on the public side, but there is hopes that private capex will also come up. That is one leg, and the other leg is NBFCs, insurance companies. Now you're seeing general insurance companies also coming in. So government is starting with GIC and NIA, and we are hearing other private sector also considering it. So I see predominantly financials, and then possibly consumer and healthcare. Okay. Are the two sectors which we are looking at.
Sanjay, good morning. So for financials in particular, we had $2 billion SBI issue. We had huge issue from Yes Bank, Kotak. Is there more in pipeline in the larger banks?
So banks, so whatever is in the public domain can talk about. So on the IPO side, SBI Life, GIC and NIA are there. These are all three big $1 billion plus expected transactions. So these would come in at any point of time. There are other banks also which are looking at, but not to the scale of SBI.
Okay. What are your thoughts, Sanjay, on this whole talk of a merger of, some of these smaller PSU banks with the bigger PSU banks? The oil PSUs could be merged together. You think that's a good idea, and what is in it for investors? So
I think, see, let's look at it two differently. On banks, I think, this is my personal view, in terms of small banks being merged with a big bank, I think SBI story was different because it was anyway the subsidiaries. Here, I think it's negative for the big banks, positive for the small banks. I think may not be a good idea. Combination of smaller or weaker banks, again, there's no ownership coming in, then who will take the ownership and lead the whole thing? Possibly privatization could be one option to look at.
Have you any buzz or anything on how they will go about? I mean, for the investors, it's very difficult to understand. Should one move out of small banks? Should one move into small PSU banks? Any idea whether the swap ratio will be such that investors won't be punished?
It's too early to talk about, I think, on swap ratios and all. But I think investors are being wary and being away of from these banks is what my view is.
They are not away from the small private sector banks.
No,
and that is
public
especially...
sector.
No, I agree. I'm just asking your view on the other segment. The small, old generation, also private sector banks, especially after Fairfax got permission to buy Catholic Syrians 51%. Suddenly, there is a lot of interest, like, will there be more such deals?
So that segment, I think you're seeing a lot of old private sector banks doing well. So either they are growing and raising more capital, or these kind of deals of mergers. So that space certainly is
no, but can more happen? The problem is that, for instance, in City Union or in many of these banks, there is no single identifiable promoter. Yes. So should investors bet on this? After looking at Catholic Syrian, there is a lot of interest. People keep asking, will more such deals happen?
I think what we have seen in the past is people have been backing the management because, as you rightly said, there are not many banks where you have single larger shareholder controlling it. These are all small things. There is no defined promoter per se. So it's primarily driven by what the management view is. And you've seen, say, stuff like Federal Bank or Lakshmi Vilas Bank. These are doing well in terms of management.
But you expect a deal? I mean, I was going to say federal myself.
They've taken a resolution, so it depends on whenever they find the right time.
Okay, what about disinvestment? You've been positive on that, the government's disinvestment plan. What do you see coming through, and do you think they'll meet their target?
I said we have already now almost 3 months of the current financial year done, but they've used these 3 months very rightly in trying to finalize everything. So if you look at the GIC and NIA banks have been finalized. There are some 7 OFS banks which are finalized for a total amount of about 5 billion plus. The railway IPOs are being done. So they are gearing up. So far they were focused on more on OFS. They have done one IPO as well, HUDCO IPO, which has already got done. So they're geared up on that. I've seen the team has also gone up from 2 joint secretaries to 4. So they're all getting geared up. I think in the next 1 month, they will all be set, and then depending on market conditions, they will tap the markets. The other piece which is also very active, and they saw in the last year use that for capital raising, is the ETFs. So you know the CPSE ETF raised a substantial amount in quick succession in 2 deals. They've already announced the advisors and the fund for the next ETF, which with the different combinations, because the first one was more focused on oil, gas, energy. This could be much more broader sense. But that ETF product, I think, is very good from a perspective of retail and the pension funds. So these are people coming in primarily for the discount which they get to the traded market price.
You know, most of the sales and purchases that have happened in this institutional market have been private equity guys cashing out. Yeah, there have been some instances of banks raising capital, but there have also been many instances. Which is likely to be more? Will you see more private equity exits?
It's seen, or at least it's more visible that there is a lot of private sector. But if you look at last year and the previous year, the offer for sale component would not have been more than 55–60%. Though the number of deals were more because the size was small. I would say that would continue because of the companies which have grown, but the focus would be more on financials if we see this year. So if you see this year, we've raised QIPs, I was seeing about close to 5 billion. Practically everything is financials. SBI, Kotak, Yes Bank. Apart from Hindalco, which was the largest other deal. So it's primarily focused on financials, which is the early starter, because in a CapEx cycle, the financials will first raise money, be ready for lending, and then the CapEx cycle should start. No, we've been talking about it for quite some time. Hopefully in the next 6–12 months it should.
Is Hindalco a trendsetter? Should we expect other metals to do that?
So Hindalco was more from a deleveraging perspective. So it's again not a capex story.
Yes.
But that has changed the story for Hindalco. It's now totally different company.
No, so the other steel companies, other metal companies are also hugely leveraged. So should we expect?
Ideally they should. The stocks, the sector-wise also the stocks have been doing well. So investors would be keen to take it.
You don't see any investor ennui. I mean, you expect that divestment candidates, insurance companies, banks will all find appetite.
Yes, because of this one thing, because I used to be always asked a question that there'll be so much of primary supply, which should not be a negative for the secondary. This time it's the other way around, because the primary supply is actually helping to ease off some of the liquidity flows which are coming in the secondary market.
All right. Thank you very much, Sanjay Sharma, for dropping in.
Thank you very much.